Welcome everyone, Michael here. We are in Vevey, Switzerland on Lake Geneva. Today we're going to discuss the origins of Swiss bank secrecy and why Switzerland has been for a very long time regarded as one of the premier banking hubs and what the current status is relative to other parts of the world. So I'm going to kind of fill you in towards the end on what you should be thinking about in the global banking environment today regarding in the past, which has changed quite a bit in the last, I would say, 10 or so years, 10, 20 years. So if you kind of look at the history of banking, of course, banks were principally a place to store your money and keep it safe. Back then, there was not a transactional value in banking for the most part. Obviously, credit between banks in various countries would once in a while happen. That was sort of very famous in the period of the Rothschilds, where they had kind of the 5 major banking centers. But if you go back really as early as the Middle Ages, you had a tendency for people to want to store money somewhere. And Switzerland rose in prominence as this place. So why was that? The reason is largely because of the neutrality. Now, neutrality in Europe was pretty uncommon going back throughout sort of the Middle Ages. We had a lot of wars, a lot of changing borders. I mean, really as recently as sort of World War I, you saw Prussia, which was a really major force in Europe for a long time, essentially ceased to exist. Poland started existing, and I believe it was 1921. And so it just kind of tells you about what was going on at the time. A lot of changing borders, a lot of disruption. And so Switzerland really stood out quite uniquely as a place that was able to maintain stability and neutrality for a long period of time. If a place was taken over, as happened pretty regularly across Italy, across parts of Germany and the borders, the Austro-Hungarian Empire. They were shifting with France, with Spain, obviously with Portugal, with UK, with like all over these areas, just dozens and dozens of separate kingdoms and city-states and all this sort of thing would have this changing order. And as it did, you can think logically, you would have to ask, well, what happens to my wealth in the event that happens? And it was very, very valuable to have a politically neutral place that you could keep their money. And what tends to happen in those cases, one of the things I was talking to somebody about recently, is the difficulty of recreating network effects. So when you have places that don't tend to get a lot of wealth coming in there, who don't kind of specialize in banking, they don't develop all the ancillary services that go on to that banking. And similarly, you can kind of think that there's a lot of self-interest in preserving that when everybody's money is in that place, right? Now, in 1934, Switzerland implemented, or they passed, I guess it was not implemented until 1935, the Swiss Bank Secrecy Act. And this gave a lot of additional privacy, which leading into World War II with the Jews became really important. And it's worth understanding, I think, there's a book called The Prisoners of Geography that you can check out that kind of discusses a lot of how the world has been shaped by geographical factors. So, I mean, literally Switzerland was next door to Germany, next door to Austria, and yet managed to maintain neutrality throughout World War II. How was that? And a big part of it has to do with the geography, right? It's very difficult to go through the mountainous areas of Switzerland. They had various tunnels, and so they threatened essentially, if you invade us, we're going to collapse these tunnels. That would have been really detrimental in terms of being able to move trains through the region. And as a result, maintaining that neutral position was quite possible for the Swiss, and it was pretty deeply ingrained within the local culture, within the local politics, etc. In addition to this, the way that Switzerland is organized is extremely decentralized compared to most countries in Europe. There's 34 cantons in what is a really quite small country, and a lot of the decisions that are made at the cantonal level, not the federal level. In fact, to this day, you can go and you can negotiate with cantons. You can kind of have them bid against each other in certain situations related to if you're going to go and set up a company in the country and you want to bring people in and you're interested in what that might mean in terms of the tax treatment, in terms of the immigration treatment, etc. It's possible to get sort of special local treatment. This doesn't change the federal side of it, but because a lot of what's going on is at the cantonal level, this gives you a bunch of different advantages. So that was pretty important to the formation of this worked. Now, fast forward, as the world changed and as a lot more international money from other places started to flow electronically, as opposed to, you can kind of imagine, there was no electronic money flows back in 1934, 1935. The way that transactions would happen didn't happen nearly as much in a network manner. Okay, so this is something that very few people seem to understand about how banking works. When you look at how banking works today, it's a network function, meaning that I can have a bank that I can hold your money. But because of the fact that you're reliant on transacting electronically, typically through something like SWIFT or SEPA or similar networks, if you don't have access to that network, great. Well, then what? You probably can't spend on credit cards. That's a problem. You probably can't send or receive wire transfers. That's a problem. You're increasingly not able to deal with cash. That's a problem. And so what do, right? The whole nature of how banking works has changed pretty dramatically. In spite of this, well, essentially, the popularity of Swiss banking as a place for basically people to hide money had grown over a pretty lengthy period of time. And in 2009, the US Department of Treasury, IRS, ended up cracking the Swiss banks for the first time. And the way that they did this was there was a whistleblower who came out and said, look, they're hiding a whole bunch of money in there. It was hundreds of millions of dollars from people who are Americans who have tax dollars that are unpaid. And they happened to disclose a bunch of information. And the Swiss said, hey, we have Swiss bank secrecy. We can't tell you anything. Sorry, IRS. And by the way that this works is related to crimes. So in Switzerland, although you're not supposed to, of course, commit tax evasion, it was not a criminal offense to do so. And so because it might have been a criminal offense in the US, but it's not a criminal offense in Switzerland, it meant that, hey, look, we're not going to impose your rules in our country. However, the issue with this was, and this is probably a really good lesson for people who are interested in paying attention to how to diversify their assets, et cetera. UBS has presence in the US. And they said, okay, great. Here's what we'll do. We'll go after the UBS people in the US. And now all of a sudden there's whoa, there's a problem here. And the Swiss government essentially agreed to allow them to override this bank secrecy, and there's various conditions, et cetera, on that, but to disclose who these American account holders were in Switzerland, in UBS. And that was the start. Suddenly you had this exposure of information. In 2011, they made a similar deal with Credit Suisse. In 2013, they made an agreement with essentially all the other Swiss banks. And that was basically the end of Swiss bank secrecy from governments. Now, to this day, Swiss bank secrecy is still very strong in sort of personal civil affairs, right? So if we're not talking about governments, then it's a different ballgame. But for big governments, there are a variety of different ways in which your information is exposed, even in Switzerland today. And so what are those? So first of all, to the extent that they're going to go after you for some particular crime, certainly they'll have access to that information. There may be legal procedures they have to go through, but they can do it. Number two, in 2015, FATCA, the Foreign Account Tax Compliance Act, came out, and that essentially obligated automatic information sharing from the Swiss banks back to the US. And this was essentially, they made every bank that wanted to deal with the US dollar a tax reporting agent of the IRS. So outsourced essentially a large amount of compliance. It was very expensive for a lot of these banks, which is part of the reason why for a very long time a bunch of banks didn't want to deal with Americans at all. And in fact, today, still some banks don't want to deal with Americans at all. I had a conversation a couple of years ago with one of the Swiss bankers we deal with and said, hey, who is it that you're not willing to take? And I'm like, well, there's Iran, there's North Korea, and there's the United States, right? So quite an issue. Then in 2017, you had the Common Reporting Standard with automatic exchange of information with the OECD. And so Switzerland is a part of that now. And so therefore, what this means fundamentally is that for the purposes of tax reporting, information from basically all the countries, Switzerland being one of them, will get shared back to the country of residence. Now, it's worth noting that that is about the country of residence. Now, in the case of the US, you're talking about the country of citizenship is considered in one form or another to be country of residence. And so the secrecy extends, yes, to, spouses and, common creditors and all that sort of thing. They're not going to know that you have accounts or the contents of the accounts, et cetera. That's not going to be disclosed. But for the purposes of tax reporting back to home countries, this is no longer the case. And this is pretty much not the case in any part of the world that you would want to bank today. So I sometimes have people come to me and they say, listen, I'm looking for a non-CRS country. I'm like, the issue with that is those countries typically are not high quality banking jurisdictions. So you're taking on a different type of risk. And increasingly, countries that formerly were in a situation that they were quite willing to not be part of CRS have gradually come around. And so you have places like Georgia, for example. And so I generally advise people that, look, this is kind of a fool's errand. You're going to end up finding yourself just going further and further afield until your funds are greatly at risk. So I advise people today, don't worry about that. Utilize proper legal structures, put things in place as you should properly. certainly, I can understand wanting privacy from various different parties, but from the standpoint of governments, the biggest thing you can do is change your residency and utilize that as kind of, okay, they're going to go to where you're resident, and so go to a place where you're not concerned about your government. That's probably a good starting point. Now, in spite of this, we've seen kind of progression further since then, and most notably when the war started between Russia and Ukraine. And so this was pretty famously, Switzerland abandoned their traditional Swiss policy of neutrality, and they essentially sided against Russia and Russian assets at the same time, actually, that the EU did. I think this was probably a pretty bad move on their part, brand-wise and reputationally, but it sort of told you about the changing sentiment in Switzerland. And I think it's worth understanding that that isn't even necessarily a Swiss thing. It can be, but what it more is it's a matter of this kind of global pressure. So today, because of the fact that those banks are reliant on their connection to other banks in order to be worth anything, they cannot put themselves at a place where they risk being cut off from those other banking systems. Suddenly, their customers' funds are useless. Their value as a enterprise is pretty useless. And so they just simply won't do it. So this is, probably a really bad thing about the modern banking system. It tends to kind of cluster to, I would say, the will of the least tolerant. And that's not amazing. Ironically, the variety of US banks are probably some of the most agile areas in this regard. There's a lot of independent banks in the US, and they're very much able to kind of function within the US banking system with a lot more autonomy than some of these are in Europe, especially when you get these larger banks. Generally speaking today, it's easier to work with larger banks because they have less dependence on what goes on with some other banks. So the way that this works is, essentially, when you have a lot of smaller banks, what happens is they'll have an account at a larger bank in order to do international transactions. And so they have to scrutinize those because they're also going to get scrutinized at their sponsoring institution, the correspondent bank. And so this gives less flexibility. Now, arguably, SEPA, the EU, IBAN system, et cetera, have helped that a little bit in the EU. And so you'll see that the EU has recently, through all these EMIs, had a bit of an explosion of different banking options that make it a bit easier for people. I've talked about that previously in some other videos. So anyway, where does this leave you today? Well, Swiss banking is still of very high quality. Okay, so you're still going to get great quality banking if you're in Switzerland. There's a lot of safety, especially when you're talking about the way that private banks are regulated. There's sort of a difference between private banks and sort of commercial banks. So there's a lot of safety on the private bank side. You certainly can get bankers who understand you and who are willing to, work with you and go through that. Compliance tends to be fairly high, certainly on the onboarding process. I would say it's not like something where you're just going to walk up and open an account in the same day. This is really not typically going to happen. But this being said, once you do get an account, you can get a lot of service, often a lot of good service, depending on the bank, high quality apps. Again, that varies bank to bank, et cetera. The fees are fairly high. I would say that it is not inexpensive to bank in Switzerland. It is certainly on the higher end. And so you have to kind of debate, like, is it worth it or not? I think if I was just looking at the services provided for the money, then generally I would say it's not worth it. That's my usual opinion. Commercial banking tends to give people most of what they want in most situations. However, because of the fact that banking today is frankly kind of awful, you're in a situation where you're forced to choose, like, well, what are my other options? And so I frequently tell people, Singapore, we help people open accounts in Singapore regularly. And so if you're interested in that, you can reach out to us. That's an option. The US is an option. If you get residency in a country, then generally you can get banking in that place. And that gives you a series of options depending on where you're willing to get residence permits, especially if you have multiple residence permits. You can certainly get accounts in places like South Korea, which is sort of an underrated banking area. And then you have places like Andorra, Liechtenstein, Luxembourg, et cetera, that kind of offer some alternatives, the Channel Islands, Jersey, Guernsey, Isle of Man, that will also give you some reasonable rate. But the truth is that most of these don't really stand out meaningfully from Switzerland, right? They tend to be pretty similar. If you go to Liechtenstein, you're going to basically have the same experiences in Switzerland. So, okay, it doesn't really gain you anything. You go to Andorra, similar sort of situation. You go to Luxembourg, similar sort of situation. In each of these places, I would argue the banking is less refined. There's less options than Switzerland. So Switzerland tends to win out. I would say it tends to be similar if you're looking in some place like the Channel Islands, minus the fact that minimum deposits tend to be lower. So you're looking at, like, if you're at Standard Chartered, for example, in Jersey, you're talking about 100,000 minimum, versus if you're in a Swiss bank, typically as a foreigner, you're talking about $1 million minimum. Again, it depends bank to bank, but sort of that's the general idea. And so usually simply being able to have residence permits in other places will give you some advantages. I do think that for me, the top choice would still be Singapore. And so if you have an opportunity, that's great. You're usually talking about sort of a 200K, 250K minimum. A lot of the banks you have to visit in person, so you have to be willing to do that. But they're fairly accommodating, and you get really high quality banking. Again, not at the lowest fees. Like I wouldn't typically want to do my brokerage through those. You have something like DBS Vickers, etc. These are not like the best brokerage solutions, but for the actual banking, I think they tend to be one of the top. And the other one tends to be the US. A lot of people, there's various reasons why they might want to stay away from the US. But as a general rule, you have a pretty strong banking environment. So for me, those are kind of the top three. And then, like I said, depending on where you're resident, etc., you can look at some others. So let me know if you have any questions. Put them in the comments below. If you would like help with any of that, please reach out to us. You can send a message through offshorecitizen.net, or you can book a call with me, calendly.com/Michael-Rosmer. Link in the description below. And I will look forward to seeing you guys on the next video.